Yeah, I think to be honest, if we had known that the Radius is, call it a $3 or $4 million business. It took a lot of work to get it there. And I think if we had known at the beginning point, like, this is the opportunity you're stepping into, I don't think anybody would have stepped into the perform your best when your back's up against the wall. And our backs were completely up against the wall. And I pounded the phones over that summer. We started getting a lot, momentum, and it just kind of started to snowball. And we literally just scraped by, running out of money at that point. But it's the most powerful thing I found in my life, is that when you embrace discipline, when you embrace pain to a certain extent, and you realize that that is the path to progress, that's when your world completely changes.
Welcome, everyone. Thank you, Cory, for joining us today.
Thanks for having me, Bob.
Last week, we had an interview with Anthony Pompliano, Pomp, who has a great podcast. And we talked about the prosperity in a broad sense, societal prosperity. And he gave a very compelling argument about how in today's world, it's the best time to be alive for anybody in society, because the power to the individual and the smaller company has never been greater because of the tools available and the capital available. One of the things that he implied but didn't actually speak much about directly, except for his comment, compete or die, is the implied motivation and diligence that's required to get something created in the economy. And your journey of creating what has now become 3 companies is loaded with interesting lessons for other folks who are interested in building companies. And that's why I'm so glad to have you on today. I guess I'd love to talk about what was the initial idea. How far has it migrated? How important was it that there was a North Star on where you were heading? And how important was it to block and tackle every day and disregard that North Star from time to time?
Yeah.
And how close are you to that North Star? So why don't you tell us a little bit about what your companies are right now, and then what the original idea was, and then we can go from there.
Good idea. So the companies today, so essentially, very simply, we've got a company that has digitized all of the data that a self-storage investor, operator, owner would need to make a decision. So where every facility is, what rates each facility is charging, a bunch of other ancillary pieces of data that if you put into a single package, which we've done in a platform, allows them to synthesize that information and make decisions about, should I build a self-storage facility here? Should I buy this self-storage facility, et cetera? That company's called Radius Plus. I started another company called DXD Capital, which is taking kind of a different approach to how sites are found within self-storage. And we've raised, $100+ million there, and have built or are building, right now, between the ones that are open, we have 2 that are open, 8 that are under construction, and another 10 behind that. So that's called a development acquisition company that's completely arm's length from Radius. And then a third software company called Managespace, which is building property management software. So, we can get into specifics of that, but essentially it's within self-storage as well, which is, there's a very antiquated solution that exists. It's essentially a monopoly. And so we just see another opportunity to kind of create value by using our expertise and kind of cutting, the leading edge technology that exists today, which is not what exists in the market. So going back to your original question, like the one thing that I would say, I remember, so I came from JP Morgan, and then I went into the hedge fund world, which is Bob, I forget if we met when I was in the hedge fund world or prior at my life at JP Morgan. But I remember sitting in a meeting, because I was a buy side analyst investing in companies. So I'd meet with a lot of companies. I remember we were meeting with a company whose CEO was talking about his journey to building, I forget what company it was, some sort of technology company. And he said something in the meeting, and it was right at the very beginning of like us starting this other venture. And it was, he said something to the effect of, I could have never imagined what my company would become when I originally started with a completely different idea. Like the idea that you're going to start with an idea, but there's definitely a chance that like what you find as it relates to market fit or opportunity or other things that may come about, like you may end up pivoting in a completely different direction. And his comment to me was, I could have never imagined that we would have built the company we would have built today, because it's completely different from the idea of what I originally had. And that resonated with me because at the time we were kind of undergoing a similar shift. And so back to your original question of like, what did we originally start? Like, what was the premise of Union Realtime, which is kind of like just a legal holding company of everything that we're doing? We wanted to take our expertise in that we were very deep, fundamental buy-side analysts, take that skill set, do a very deep dive on an industry that we thought that there was either a very big long or a big short opportunity on, couple it with data, and package that to investors to, as a service to essentially create value on very big ideas that we found. And so that was the premise of the business. So like, let's just take the skill we have, add another partner that has a very savvy knowledge of how to use technology and find data, and let's see if this works. The first industry that we started looking at was self-storage. And self-storage was this industry at the point, it was kind of, it had been under this massive bull run. And in 2016, there was a bunch of supply that was under construction. And so we did the due diligence and realized that there was a big supply wave coming. It was going to impact fundamentals. No one in the industry realized that this was occurring. So like, that was a great short setup. Like we had our first industry to analyze. Perfect. Our business model is working so far. We started doing the due diligence around, all right, let's figure out, we know that there's 3 million square feet under construction in Denver, but we couldn't really find a solid data source of like, what was the installed base of supply in Denver? And that's because no one had ever figured out what the installed base was in any city. It had always been an estimate. It's something called the Self-Storage Almanac, which is like comparable to the Guinness Book of World Records, like something that's published once a year, big fat book. It's based on surveys. And so, that was an interesting data point because, there was a big gap we saw within how the self-storage industry was functioning. There was a lot of data that needed to exist that did not exist. But prior to us pivoting, so we focused on this short thesis. We never shorted the stocks ourselves, but we had some of the biggest hedge funds in the world as our clients, and that was incredibly successful overnight. The pivot for us, and getting back to like, how did we start versus where did we go? One of the CEOs brought me in to his company and said, when he saw the data that we had put together, because the data that we started tracking in the beginning was rental rate data, because if we were right and all the supply was going to hit the market, when you have a massive increase in supply, price goes down. So we were tracking rental rates under the premise that rental rates would go down. And we would provide that data to our clients as a proof point around, here, the research we've done, here's the data, it's actually rolling over. You can make a lot of money by shorting these stocks. The CEO brought me in and saw how we were putting together data in a very seamless manner and asked us to talk to their team. When we talked to their team, they showed us how they were underwriting a self-storage development, which was 9 different spreadsheets of them going and figuring out where every facility was in Google, drawing the little boxes around each of the buildings, like a 3-hour process of like calculating supply, pricing for each of the sites they're looking at. And there's hundreds of sites they've got to look at. And so we looked at that and we realized we could create a product that solves that problem. we have to figure out how to digitize or figure out where every self-storage facility is in the country and very precisely draw them. But that was a pivot moment for us where it's like, okay, we could continue to do research on different industries and go along the business model that way. But there seemed to be something very special about what we just discovered, which is that there's a data set or several data sets that this industry does not have. They need to take those data sets and compile them into a platform of some sort. And we have the ability to do that. And so we, without really understanding how big that market was or how smart that market would be, we just kind of jumped and said, okay, we're going to figure out where every facility is. We're going to put this all together and we're going to get rich. And
just to summarize, you from your investment experience, you understood what information you needed to have to make a really firm decision. In this particular market, there was a much lower level of good information than what you had found in other industries that you had studied. And that you were amazed that companies relied on this lack of information to make their decisions, and yet the industry had grown into a very large industry. And so
it was a massive industry.
And you knew that by putting together a database of all of the facilities and monitoring the pricing daily, that you would be able to replicate what each of these large companies were doing by hiring lots of people to do inaccurate work or a lot of estimating.
We could save enormous amounts of time at scale if instead of them taking 3 hours, they clicked on a button and were able to get the answers to what they needed. There was value in that. We knew there was value in that. The problem was we didn't know whether that TAM was $1 billion or $10 million. It ended up being the latter, which was tough for us to swallow at times.
And you're talking about how much money you could raise, how much money you could sell this database for to people that needed it, right?
Yeah, it would. That calculation is like how many people there are that are willing to pay X to give you Y. Yep. And we thought we hoped, because you really don't know in the beginning, because you're creating a product that does not exist today. So it's like, how many people would like to buy this product? We really didn't know.
Also, there were a lot of data companies at the time providing data to hedge funds and money managers that seemed in aggregate to be getting a lot of money from them. And so the data business seemed like a good business at the time.
Yeah, certainly seemed that way. Yeah, I think to be honest, if we had known that the Radius is, call it a $3 or $4 million business. It took a lot of work to get it there. And I think if we had known at the beginning point, like, this is the opportunity you're stepping into, I don't think anybody would have stepped into the opportunity.
There's a reason no one else had done it.
So like, yeah, exactly. The like this idea that like, oh, you kind of have to get pregnant with something and go, certain far down like a rabbit hole before you realize like what rabbit hole you're in. And by that point, you're so committed to that rabbit hole that like you have no choice but to go forward. Yeah. And like that was probably one of the biggest things that like I felt like I had no choice but to keep moving forward. Like when we were mapping, it took 2 years to map where every single
facilities had to be mapped.
Well, so the give and take that we like dealt with was like there was a feeling in the industry that like the product couldn't be useful until we mapped every one.
Yeah.
And yet there was an incredible investment we needed to continue to make to map every single one in order to do that. And where does that balance exist? And are we going to continue to throw capital at this without even like any sort of evidence that we're going to be able to charge people for it? Because we'd made this money from advising these hedge funds. Like that was the seed capital that we had to put into this business. And we had kind of at a certain point, like no choice but to just risk throwing all that into building the database and building the platform under the hope that this would work. And, so I think going back to your original question, like it never started as we're going to build a analytics platform for the self-storage industry. it just kind of evolved into, okay, here's another even more interesting opportunity we seem to have a competitive advantage on, and we just kind of went after it. You know, the kind of the biggest turning point was kind of 2018 during the summer, where we kind of got into a critical mass with how many facilities we'd mapped and the data that we had in the system. And on the other end, we were like 4 months away from losing, running out of cash. And for me, you know, my biggest role in this partnership with my, other partners was sales, like taking the product, putting it in front of people and selling it. And I had a very difficult time getting over the fact that, like, at that point, I hated sales. I thought it was just the most toxic, ugliest animal you could ever get involved with, before I realized that, like, everything is sales. When I was a buy-side analyst, I was selling my ideas to the portfolio manager. I was, selling my position sizing. I was selling everything that I'm selling myself to the CEOs for him to give me information that I need to put the pieces together. Like, everything is sales. When we kind of got to that summer of 2018, where it was like do or die, it was one of those moments where it's like, I have no choice but to bite the bullet and figure out how to sell, even though it's something I truly hate, like cold calling, getting in front of people from 8 o'clock in the morning till 5 o'clock at night. And luckily, when your back's up against the wall, what my feeling's always been is like, you perform your best when your back's up against the wall, and our backs were completely up against the wall. And I pounded the phones over that summer. We started getting a lot, momentum, and it just kind of started to snowball. And we literally just scraped by, running out of money at that point. But, there were several moments like that.
Well, and there was a big pivot at some point where you realized selling to hedge funds and money managers was not likely to be the easiest source of revenue to keep your company going, right?
If you looked 20 years prior, that would have been a great business model. When we were trying to roll this out, there were changes in how Europe was restricting how brokers could get paid, and that was funneling through to the entire industry. It was the commoditization of research to a certain extent. And even though our research was very valuable, what was our ability to continue to run on this treadmill and find new ideas just seemed to be incredibly daunting. I did not want to do that. I had no desire to do that.
And so the pivot was towards selling the information to the industry, so that it made it easier for them to find new locations and decide what the value of current locations was.
Exactly.
And what pricing could be, right? Because you're
selling them efficiency. You're selling them a platform that allows them to, instead of having 4 analysts, you can have 1 analyst, and you can do it at scale. And that's what we were selling them. And it's gone well. I mean, we've got REITs as clients. We've got most of the big operators as clients. We've had a great team to build a great product along the way, and it certainly has worked out.
And pricing was a big challenge too, because again, you're a unique product, and how do you get somebody to agree to a price?
That was one of the biggest things. I'd say that if I didn't have my partners involved in the business, we would have missed the mark to a certain extent, because there was the products that existed in the market, which were just incomplete in their nature. We're trying to charge annual subscriptions at a very high dollar rate. And one of my partners, Adam, had this idea of like, Amazon is kind of races to the bottom in everything and kind of wants to scale as much as possible. And, his concept was, let's create a pay-per-use avenue onto the platform, $20. So you get access to like the basic platform, but with how fragmented storage was, it ended up being a terrific strategy. And that is a very large business for us today, even though people are only paying $20. But I was against it. I was like, we are giving up so much value for $20. I mean, I had people telling me all over the place, this is a horrible idea. But ultimately what that did was it opened the gateways for being like the centralized platform that, like, there are a lot of people out there that can't pay $20,000 a year. And we're actually able to extract information from them around trade areas that, like, maybe we missed a development project that was underway. So like there's a lot of value that they do create into the platform. From my standpoint, I was just worried about keeping the lights on. So I was like, we're going to trade a $20,000 subscription for a guy that's going to pay $20 for getting on the platform 6 times a month. That didn't seem like a good trade-off to me. It was definitely the right trade-off, because the people that that can pay 20, that need it for that $20,000 annual subscription, they end up paying in that route. They don't try and go the pay-per-use to try and thread the needle on extracting as much as they can for as little as they can pay.
Well, I guess it addresses customer satisfaction too, because if they wind up making $1,000 or $10,000 because they paid 20 to you, the idea, they know where they're always going to go back to, so that, and the word spreads and you're just delivering so much value. Is that part of it?
It's totally, you're creating 10 times the value at half the cost, sort of thing. And it's definitely
well, there was an adage about, the next technology has to be 10 times better than the last one in order for it to succeed.
Yeah, there had to be a step order function difference in what value we were creating. And there definitely was. Like when I was demoing this to people, they were blown away. And so I was like, so let's just charge for that. And that was not the strategy we took. And thankfully, that I was overruled in that regard, because
I guess it also reduces the need for a sales force.
Well, it reduces the friction for people to get to know the product. And that has been probably one of the most impactful things. Like, you can sign up on the site and you get 5 free credits, like these, basically $100 of free usage to use the product. Now we had to create a tighter authentication so that, because we had a lot of people that were just trying to sign up with multiple accounts to then use that. So like, there are always going to be your bad players. But when I come on to a software product today that's like call for a demo, like that is such an antiquated way of structuring the front end of your product, because you want people just to, the way that someone told me, at one point is like, you want them to get addicted to this product, and you can worry about how to monetize it later, but don't create a ton of friction at the very beginning. Like, push value into the chain. If it's really as good as you think it is, they're going to continue to use it, and you can figure out how to monetize it once they've created that familiarity and loyalty to the product, and don't create a huge barrier in the beginning as it relates to like getting people on, because you think the value is such that they should be paying you right from the start. That was a very large mind shift for me that has, been an important mind shift, I think, as I think about a variety of things in my life.
So what were the moments where that's a big pivot point. And so you started getting traction, and that was in 2018, you said?
Yeah, 2018.
And what were there other pivot points? Were there other, near brushes with death that required a shift? And how did you wind up starting the 2 other companies?
That was the most serious financial brush with death. I'd say the only other brush with death was more than an emotional brush with death, which was that later that summer, we had a deal with one of the top 2 REITs that they saw our platform, and they were so impressed, they were going to put their occupancy data onto our platform. It was going to be like this kind of exclusive data partnership, which within self-storage, because it's so fragmented, it's very difficult to extract the occupancy data. It all sits in their property management software. So we were thinking, okay, if we can get one of the big REITs to lead the way with sharing that data, then other people would start sharing that data. And we would be this like completely unique platform with a completely unique data set. They were on board. They were going to do it. I mean, this was a big deal. Problem is that as we were negotiating the press release, the head of investor relations read the press release and he's like, wait, these guys over the last 2 years have created a monster headache for me because they've been advising the hedge funds to short the REIT stocks. And even though we'd largely exited that advisory business, I mean, exited the advisory business. That put a hard stop to that right away. Like the head of investor relations, which I can understand the position he's in, but he's making an emotional decision. Instead of them moving forward with continuing to evolve the data in the industry and how things are going to work, he's going and thinking about how many calls he had to take with hedge funds that were looking at our pricing data, trying to explain why the world wasn't going to end in self-storage when we were telling them that, you should be shorting these stocks. So we were like days away from announcing this massive partnership that just would have been this huge tail into our business. And then I get a call, said, oh yeah, we're going to have to pull out of this because, our CEO caught wind that you guys used to advise hedge funds to short us, and he's uncomfortable with partnering with you guys. That was one of the biggest emotional blows that I've had, because I thought in the moment you think, we're done. How can we move past this? Like now we can't, and you move past it. You're stronger for it, but you move past it. Nothing ever is really as deadly as you think it is in the moment, but emotionally that was a crushing moment.
And so what that did was it removed the dream of, boy, once this happens, our business can really grow quickly, and then you're back to the day to day.
We pivoted to this we pivoted to the reality of like educating people that pricing in self-storage works like it does in airlines, which is that the rates are set every day, and if you're looking at the pricing within an area, that's telling you the real-time supply and demand balance. So while occupancy is a valuable data point, REITs basically manage all their portfolios to a 92% occupancy. So you can find that information out after the fact when you're on the ground interviewing managers, if you're trying to figure out what that data looks like. But the pricing data itself is telling you what's going on in the market. And so it allowed us to just kind of pivot and, re-educate the market that you can get away from occupancy. In hotels, occupancy was a dominant data point that, STR was able to aggregate in a certain way. But anyways, we pivoted to educating people around pricing, and that led to, all right, it's actually, and it wasn't a hoodwink. Like pricing was the data point that people should be focused on, which made us then realize, okay, we should build a analytics layer that allows us to view each market in a heat map type dynamic where I can see where the high prices are, because you never drive more than 10 minutes to go to a self-storage facility. And so you have these captive customers that are in and around these areas. So if you can find where rates are really high, that's the area at which you need to add supply. So being able to quickly visualize where that exists would be valuable from our standpoint. And so that was where we kind of created this other technology, which when we showed it to the industry, they were like blown away. This is the future of development, blah, blah, blah. We couldn't get to a place where like we could agree upon like what the clearing price was on the cost of that software. So that's where DXD came, when I was like, you know what, I will go out and prove that, we can, build a company around this concept of this technology, which was just the kind of the beginning of this tech that we were using around, trying to be more efficient. And that's where DXD came from. In March of 2020 is when it technically started. I mean, great time to be starting a private equity firm, but called one of my clients from the Radius side, because that was the great part about starting Radius, is I knew everybody in the industry. So I called one of my clients and said, we have this tech. What do you think? Let's go try and develop these self-storage facilities. I'd been trying to do that for 2 years in a variety of manners, but that's where DXD came from. So we hit the road in August of 2020. flying across the country when I was the only one in LaGuardia. Took a picture that day when I was like, I am literally the only one here, you know? And we started meeting with people saying, this is what I've done in self-storage. Here's the tech that we're going to use. Here's, 3 or 4 development sites that we had under contract. I'd called in, phoned in, some favors from executives I've met, my friends, of like, I need to raise money so I can use that for pre-development costs to put these sites under contract, to have, put money in escrow and things of that nature. Like, I went in with pulling in all the resources I could to like get 4 sites under contract. We went out, we started meeting with all these high net worth and small family offices. And in that fall of 2020, we made our first close of $12 million in that fund. And fast forward 12 months later, we closed it at $53 million. So we'd kind of been able to go out with no track record, but that, my partner Drew and I had known each other for 6 years, and all we think about is self-storage. And this is what we've done previously. We've executed on the Radius side. Drew knows development. I know data. Here's the plan. And we had a bunch of investors that took a fairly large risk on us because we had no track record together. We, knew each other, but we've never worked together. And it's turned out great. That fund we have 2 assets that are leasing up very strong, another 1/3 that's opening, another 7 under construction behind those. And we raised a second fund in 2021, a $35 million GP fund. And that flywheel is really accelerating from the standpoint of like.
This hits on something that is, I think, important in your journey and in many, and that is the power of the original idea. And so you were just saying that you were able to get $53 million of money that generally follows performance and track record that's built over time in prior investment vehicles, et cetera. And they back people that have done something before because supposedly that's safer. But the power of your idea was that I've got a data-driven solution that I get to see into markets better than other people. And we should be using that to find good locations. And doesn't this also stretch all the way back to the beginning when you were, out there as a pioneer going to conferences and meeting people? And the reason you were there is because of this idea. Like, I've got this view into the market. We're gathering this database. You're going to need to know us down the road. What we're putting together is really exciting. And that, person after person after person in all of your travels, you were planting the seeds and they were paying attention to you because of the power of the idea. Is that right or not?
That's right. I think there's 2 pieces that I think about as like talking about the journey that you're speaking of. Is we'd not kind of been ingrained with this is how self-storage works. We came to it from a very objective standpoint, using the skills that we built in picking stocks in terms of thinking about like how should things been done. And then we also were very concentrated in that once we got into self-storage, like that's all we thought about. It just became a maniacal focus. And yeah, from my standpoint, one of my things that I've become comfortable with is that one of the skills I feel like I've been able to do over the years is continue to, have this outreach, build these contacts over time that, at different points, create an enormous amount of value for me that maybe when I met the person 4 years ago, we had no idea where the relationship would be today. Like, and that comes back to how I funded DXD in the beginning. Like, there are a lot of people. A CEO of a large REIT gave me money to start the platform. And when I had met him 3 years earlier, that was the last thing on my mind. But he understood the focus that I had in the area that I was mastering, and that sticks with people. And that creates the credibility to get over the hurdles of he's never done it before, which is that yeah, he's never done a lot of things he's never done before, but because he's been able to focus and I have a proven track record, even though it's not in real estate, it's in software, I'm comfortable taking a risk on this guy. And that's where I've been able to, that's the kind of that concept I've been able to build on, is that there's been a lot of people that have taken risks on me or have helped me along the way that, as I get into something new, like when we started Managespace, which is a property management software, we knew nothing about property management software, but we'd executed on Radius before, and we knew nothing about Radius before. And so a lot of the people that came to the table to help us fund that, it was the same sort of concept, which is like, I'm investing in these guys. I'm not investing in the idea as much. I mean, the idea is central, but it was that these guys are proven to have shown me that they can execute together, that they can stay focused on something, that they can create value. And, that only occurs because we've just been so focused in a very niche part of the market, and luckily have had the right tailwinds at the right time that have helped us execute on certain things that we've been, fortunate enough to come across.
And so over the last several years now, the company's been growing and growing. You now have over 50 employees in the 3 companies, if I'm correct on that. And yep. What are some of the day-to-day stuff that you used to do to the day-to-day stuff that you're doing now? And what are how has that changed? And what do you think about the future? Have there been pivots on how you have to run your time now that are important?
In the beginning, I was sitting behind a computer drawing polygons around buildings and measuring how many stories each one was. So my day has changed quite dramatically from the beginning. And that has been one of the hardest shifts as an entrepreneur, is like going from a doer to, I wouldn't say manager, but maybe that's the best word for it, which is that you're not working in your business, you're working on your business. And that's something that I've heard, but only until I actually had to implement it, I didn't really understand, which is that in the beginning, I was working in I was one of the gears to make the business work. But as you get to a certain scale and you can start affording to put people in those positions, you need to be doing that, because your value as the head of an organization is diluted if you're staying within your business, if you're the one that's actually executing in your business. And that, as somebody who has a problem sitting still, that was a very uncomfortable transition for me, because it felt like I wasn't doing enough during the day. But there's an element of strategy, direction, and the next opportunity that I'm constantly thinking about, that's become my focus as it relates to what this business should be doing next. Who should we be bringing in next? Like I'd spend more time on HR than anything else, which is that who else do we need? Of the people that we have brought in, are we taking care of them? That's where I feel like I've gone from working in the business to now being like the head of HR and strategy. And there were certain points where it was very difficult for me to make that transition, but I did make the transition because I thought no one could do it better than me, so I can't let it go. Well, if you do it like that, your business is going to fail because you're not going to ever scale.
So what are the big challenges now for you, and have they changed over the last 6 months?
I mean, within the business, the biggest challenges that we've had on the DXD side is just, financially on the banking front. But structurally speaking, I'd say a lot of the conversations I have with people around bringing them in and bringing in the best talent, that's actually gotten a lot easier, because as you get to a certain kind of inflection point where people are starting to see evidence of what you're doing, there's that credibility that allows you to be known amongst them, and they want to naturally come and join your business. Versus in the beginning, it was like, who are you? And you want me to come take a risk on your company when you've done nothing, and I've got this other great opportunity over here. That's been the biggest kind of changes, I'd say, over the last 12 months, is that, we've really flexed into having shown the world that we're really starting to execute. And we're having conversations with people that are interested in joining the organization, that I would have, that I looked up to when I started in self-storage. I mean, these are the CIOs of some of these REITs. And like, now I'm talking to them and they're like, yeah, I'd be interested in coming and doing this. And it's like, it's a mind-blowing dynamic to have this shift of like, you were pushing to have a meeting with them and now they're coming and potentially going to be working with you. That's mind-blowing. But that's when you kind of look back and you feel like what you've done is because you never really have the perspective of, I created something really cool, because the water heats up very slow over time. One of the things that as an element of like how I've tried to improve myself from a personal standpoint is like, trying to force myself to be very uncomfortable, do things that I do not like to do. Because if you can kind of callous your mind in that manner, if you can continue to experience and push yourself through uncomfortable situations, you become more resilient for being able to deal with situations that pop up that you were not expecting. And so in that frame of mind, one of the things that I did not want to do and I've never wanted to do was to go and consistently post on a social platform about what we're doing. But I've always known that is a path that everyone's always talked about. Gary Vee and these big guys have talked about, as an important element of growing your brand and growing your business. And so one of my partners said, well, you should, if you really want to do something that's tough, do a newsletter every week. I'm like, yeah, that would be really tough. But I think I have to build a distribution before I can build a newsletter like that. And so I decided at the end of January, like, I'm going to go on Twitter and I'm going to start talking about my experiences in real estate. I've got a couple friends that at this point have gotten hundreds of thousands of followers, and business has completely changed for them. Their lives have completely changed. And so I'm like, all right, I'm going to see if I can do this. I started with, 100 followers. And in the beginning, it's, one of the toughest things to do because you're putting a ton of effort into trying to create value into the world, and 3 people see it and none of them like it. And it's that resilience, but that's the tough part, is it's that resilience of like, I know I have, I've started 3 companies, we've bootstrapped it, we've raised money, we've raised 100 million we've built 10 facilities. Like, if I don't have something to talk about and believe in that, then no one has anything to talk about. And well, I wouldn't say it like that, but it made sense that like I have something to talk about.
Yeah, there should be some stories in there.
There should be something I can glean there into the world. And so
why don't we at this point tell everybody what your Twitter handle is, because it's great.
So Storage Data Dev, which I had changed that because for 8 years it had been like this random mix of letters and numbers that I was like, at a certain point I was like, okay, I gotta professionalize this a little bit of refresh. And go back into my history of likes and make sure that I don't have anything that's inappropriate, that as people start really understanding, what my preferences are, that I can get nailed for. But
this is different from the company Twitter account, right?
This is my personal brand, right? This is Cory Sylvester going out into the world and talking about what I've done, what I've experienced, the lessons I've learned, how I do certain things, how we've, raised money, how we've built facilities. And, just about 3 months in, I've gone from like 100 users to like 4,500 users, which has been like a crazy path for me, because what I've realized is like, I do have something to talk about. It's very difficult to do it every day and to find something to talk about, but that's part of the skill that you have to build, which is pushing through that pain. But what I've realized that you're doing, I've really come to understand, is like, if you can get through that path of doing it until you find some success and continuing to iterate on it, what you're doing is you're building familiarity, trust at scale. You're building authenticity at scale. And we've seen it in the Radius business in terms of people signing up for that product. We've seen it in terms of people coming to us and saying, I want to invest in DXD. I've seen it in terms of people coming to us with sites that I would have never had these conversations with. This is 3 months in. I've got, a couple thousand followers. It's nothing. What I've really come to understand is like the most important thing that I can focus on going forward is continuing to build this trust and authenticity at scale, because it's how people will come to know what we've done. It's come to be this, how people are going to be interested in joining us on the journey, or adding value to us after we've given them hopefully 10 times the amount of value. But we can't do that. Like, we tried to do that on the Radius side under a Radius brand, like putting tweets out there and posting on LinkedIn under the Radius brand. People do not want to associate with a brand. Like, they want a person, they want a real story, they want real dialogue. And that's what people are craving in a world where, you watch the news and you can't believe it anymore. People are now understanding you can't believe it. They want authenticity. They want to trust somebody. And that's ultimately, if you can think through that dynamic and find a way to push value into the world, then what that does is it comes back to you in spades. And that's been probably the biggest realization I've had over the last 6 months, which is like, God, I wish I would have started this 3 years ago. Yeah. Like, holy cow, what would this have been if I had really understood this dynamic 3 years ago? But it's been tough. I mean, I've listened to Gary Vee talk about how you got to just push content out every day. And it's like, yeah, Gary, I get it, but that's really tough.
It's like, who wants to listen to this?
Yeah, Gary, give me a break. Like, there's a million excuses I'm going to come up with why that's not a good idea for me. And then you do it, and then you start to just get a sliver of what's occurring, and then your mindset completely changes.
Yeah.
Well, and I'm just at the beginning of that journey, but it's
skill development. It's a whole new ballgame. It's and that's the thing about building a company, is that you have to be building different skill sets, move into areas that you have to move into, even if you don't think that it's what you're good at. It doesn't really matter, does it?
You have to jump into sales even though you hate sales. You have to jump into being on social even though you hate it. And it's because you hate it so much. It's because that's the reason, almost the reason why you have to do it.
So talk about that a little bit. Perseverance, the idea of perseverance, and the idea of motivation, and why aren't these things fleeting? What is it that makes it a permanent item to continue to persevere?
I mean, everyone's on their own journey, right? And you look at me, you take a snapshot of who I am today, and it's very different than what I've been in the past. And that's because everyone always kind of has this idea of who they are and what they are. And once you start to realize that those things can change, and yes, it can happen over a slow period of time. But once I've realized that, like, you need to have a growth mentality of continuing to push yourself to get better in terms of how you interact with your children, in terms of how you interact with your wife, how you communicate, how you push yourself to get into uncomfortable situations. That journey for me has been what I've become like maniacally focused on, because it's not necessarily coming up with the great idea of, self-storage data. That's something that you'll find along the way. But what I found is, if you're getting up early, if you're cutting out the things in your life that don't add value, and you continue to look inward on like where your ego is screwing you up. Not to say that my ego still doesn't screw me up daily. That process is what ultimately I feel like is the machine behind being a successful entrepreneur, being a satisfied human, ultimately just making progress in life. And you have no other choice. Like the choice that you have, which is to sit around and watch Netflix, or don't do that, or give an excuse as to why you're incapable of doing that, is just that. It's an excuse. Like everybody is capable of achieving much more. It's first just coming to the realization that it takes a lot of work, and it takes a lot of being uncomfortable. And once you embrace that and realize that you're going to have setbacks, and it's not going to happen in a linear fashion, but you've got to continue to come back to that idea that like, I just have to keep pushing. I can't sit still. That's when things just start happening, and you'll get a few sparks along the way that makes you realize, oh, okay, yeah, I got to keep going.
Discipline and diligence of of pursuing progress.
You know, my only regret in life is that I didn't come upon this earlier, and I can't blame anybody for that. But, you know, as I think about being a father, like that's the one thing I focus on as it relates. You know, my 5-year-old doesn't really understand what I say when I tell him this stuff. So it's going to take some time before his brain develops to grasp what I'm saying. But it's, you know, everyone comes into their own and really truly understanding this in a different way. But it's the most powerful thing I found in my life, is that when you embrace discipline, when you embrace pain to a certain extent, and you realize that that is the path to progress, that's when your world completely changes. And that's what's changed my life. You know, I still rent my home. I drive a 10-year-old car. Like nothing's really changed in my life in the last 8 years. You know, I talk about, you know, I have all the same struggles. Yeah, things will turn. And when we start selling some of these assets or recapping them, like that'll be great. And I have a very good, you know, ability to be flexible at home. But like, I almost want to continue down this path where like I don't have the fruits of my labor, because it's that comfort that I am most scared of. I'm most scared of for my children, because when your belly is full, you're not hungry, and if you're not hungry, you act very differently than if you have to think about how to survive. And
well, so there's a confidence about the future that success allows to creep into your body, into your mind, that you don't have when you're struggling, right? So, I mean, you spent most of the last, how many years has it been since you started Union Realtime?
Yeah, 7.
Yeah, 7.
Over 7.
Most of the 7 years, you really haven't had the ability to have a lot of confidence in the near future, the next 2 years.
Oh, I put something on Twitter the other day where it's like the life of an entrepreneur is like my salary is going to increase in 9 months, and then 9 months passes, and I have to say the same thing. Oh, I think now the next month my salary is going to increase, and it's this perpetual experience of like thinking that the turn is always around the corner, and all that's around the corner is hiring more people and having more responsibility and more expenses to pay for. It's really, you know, only 9 months to go, but it is coming to a turn. But there is this element of, you know, once things become easier, I'm really scared around the idea of that somehow changes the mindset and the pace at which I push myself to progress. And that's the competitive advantage that my children will not have to a certain extent, which is that, you know, I certainly had great education, but I was always like a little bit lower than the guys I was hanging around with. Like there was always this hunger to want to be in that upper echelon. It's that drive of wanting something that you don't have, which I don't know if that's toxic or not, but it's just the way I've always felt, that has always propelled me to like, I gotta work harder. I gotta do that. And I'm worried about, you know, my kids potentially being in a situation where they don't have that sort of worry. or discomfort. I mean, there's a good part about that as well, because, there's a lot of anxiety that comes from that. But, disadvantaged kids, the biggest competition I'm worried about for my kids is the people that grew up that don't have it, that they're going to be outworking my kids. So like, how do I instill that mentality of hustle when your belly's full? Like that's what I struggle with a lot, because that's been the competitive advantage. Not that I was poor, but the push to always kind of get to that next echelon for me was something that, or felt like I didn't have it, was something that really like has been one of the biggest driving forces in my soul. And,
well, and that was what set your early career path, right? You moved your way into the pinnacle of finance.
Yeah, I started as a trading assistant. I was on the mortgage-backed securities desk at JP Morgan. I was just taking trades. I was around important people, but I was certainly not an important person. I was not part of the analyst program. I had traders flicking caps at my head during the day. Like, I came in through the side door, but it was that fire and that hunger that I made my way to work for a guy named Mike Semblist, who's one of the top voices on Wall Street. And I made it there not because he realized I was smarter, but he realized I'd do anything. Like, I'd work fucking harder than anybody.
Yeah. And then that got you into the investment business, and then
that bought my ticket to like being a buy side analyst, and like, all these things compound on one another. And at the core, it's just that I've been willing to show up at 4 a.m. and stay till 9 p.m. or whatever the hours were, because it's like, I want to outwork anybody that's next to me, because I know I'm not as smart as them.
Well, also you became, while you were an investor, an analyst, you developed kind of your own style of doing it, right? Talk about how you approached stocks. And
well, the way that we approached stocks was that I didn't want to be somebody who just had a view on 50 different companies. Like, there was something about finding something that was special to me that always, and I'm not sure why that is, but it was that I knew I couldn't create the value that needed to be created on my own. So I had an immense network of people that I worked with in order to basically try and attack the problem together. And one of my biggest secret weapons has been, one of my friends that I grew up in college with, I played lacrosse with, and he was always a lot smarter as it relates to analyzing stocks than I was. But I had this other ability to go out and like, we need to know what the answer is to this. There's no playbook for it. I can do that. I can go figure out how to solve a problem, which we have no idea how to get to that solution. I'll find the person we need to talk to. And so the way that I was able to create this value in picking stocks was that I was able to find somebody that didn't have what I had, but that if I supplemented them with my skills, we were an unstoppable team. And that's how we create. And we shorted companies. We shorted one company, GT Advanced Technologies. They were making Sapphire for the iPhone. We shorted them into bankruptcy. It was the most exciting thing of my life. And we went against the entire world. And it was so thrilling. And yet it was kind of the inflection when I realized I didn't want to be in a hedge fund anymore, because no one had ever, like, no one was going to take the bet at the level I needed them to take the bet on an idea like that to actually monetize it the way I think it should have been monetized. And that was deflating. Like, the way that the hedge fund world works is like, if you have a 4% position, like, you're taking a big risk and a big outsized gamble. Like, obviously there's the Dan Loebs and the third points that, may take a 10% position, but the ability to get into there, you do need the Harvard resume. You do need, like, looking at me, they're never going to pick me. I mean, I'm not anything special. So anyways, yeah, I
mean, that's important. The job of a money manager is to manage a portfolio, and that portfolio cannot be taking outsized risks unless that portfolio manager is billing the organization that way. And there are very few of those There are very
And
few
there's a lot of people that talk about the conviction behind an idea, but there's very few that actually have it at the level we were trying to have it. So like we were one of 10 people where we were the only ones we felt like within that group of 10 that actually had that conviction. And from a portfolio manager standpoint, it was impossible to know who that person was because they're all telling you they have it.
Yeah. Yeah. On the sell side, we were always, I observed that you can have conviction. The sell side has the luxury of conviction. The buy side, you can't have conviction in something because it can take you down. You have
the good thing about shorting this company GTAT is we had a definitive point at which we were either right or wrong, which is when the iPhone 6 was released. Either the iPhone 6 was going to have Sapphire on it or not. And in the weeks leading up to it, this guy on Twitter, Matt Margolis, was pumping that the iPhone was definitely going to have Sapphire on it. Whereas we covered the display companies in Taiwan and Korea, and we knew that, yes, they were experimenting with it, but there were way too many issues with scaling this across 200 million phones that had just not been figured out. And there was no way it was going to happen. But everyone was listening to this guy on Twitter, and the stock went vertical. And when you're talking to a portfolio manager who's a little crazy to begin with, about like why the stock's up 70% in your face and why you should be adding to the short position, like he doesn't want to hear that. He's just fucking pissed at you that his book is in trouble. And like, yeah, we have a definitive outcome in 2 weeks, but like to him, he can't have that same confidence I have, and that was very difficult for me.
Well, it's true. And by the way, there are very few portfolio managers in the world that would have wanted to. They all act that way because there's too much risk. There's too much that can go wrong with something like that. So you need to be in one of those special funds that loves concentrated risks, and their customers know they take concentrated risks, so that it's not the death of a normal portfolio manager. But it is a life of frustration for people that want to get to the truth, find it, identify it, know it, and believe in it.
Well, when it went bankrupt and when the iPhone came out and there was no Sapphire, and it added 10% to our portfolio's return, like it was kind of like, yeah, they understood now, but from my perspective, I was so deflated that I was like, all right, I'm ready to move on.
Yeah. Yeah, my greatest victory is a little bit of a blip in the performance of everything.
Yeah.
Well, Cory, thank you so much. It's so great to see you again, and
Thanks,
and we'll be in touch.
All right, man. Thanks for having me.